YouTube, what it do? It's your boy Luke back again with another market forecast. So in today's video, I'll be breaking down a trade that I took on GBP CAD, as you can see, which was a really great trade and a setup. It was actually crazy, and I landed a 18%, somewhat 19% gain on my trading account. So let me just try to break that down as quickly as possible. So looking at my monthly candlestick, monthly time frame, right? So the story in this time frame, or at least this trend line, is that every single time price came to the trend line, it did what? It pushed down. It did what? It pushed down. It pushed down. So we could potentially again come to this area and region again and push down. As you can see, the market is nearly about to come to this particular trend line. Just something to mention. Not only that, now looking at the monthly candlesticks, we do see that we do have a lot of bullish momentum or bullish candlesticks. We do have sellers buyers exhaustion as well at this particular level, which is a psychological level of 1.7200. So that's a psychological level. Market came to this region and then printed out a bearish variation candlestick engulfing 1, 2, 3, 4, 5, nearly 5 months and nearly half a year. So that's just something to be mindful of. But again, as you can see, looking at, or when you look at the left, we do have some form of indecision at this particular level of 1.7200. So looking at the weekly candlestick, or looking at the weekly market structure, we did print out these highs, low, lower high, low, low, lower high, lower low. Currently we did not really break, but we broke above this. We broke this particular weekly trend line, creating not necessarily a high, but we actually broke it. Came back to retest, so we could potentially push up. Something to that could potentially happen. So yeah, looking at the weekly candlestick again, we do have a lot of bullish momentum. Now looking at the daily time frame, right? So looking at the daily I'm in a buy. So we had this impulse correction. I am storing this overall continuation. If I do get to draw this fib, you can see that we have not really hit our target levels, which is negative 27, but I will definitely leave a phantom zone. Phantom zone is just there to actually show my projection, assuming that I just do not want to leave a fib on that particular time frame, because again, if I do leave this fib, it will just make my chart a bit cluttered. So that's why I just want to remove this particular fib, or at least try to hide it so that it's only visible in the daily time frame. So looking at my H4 time frame, right? So I understand, just to reiterate, is that I do know that on my monthly, weekly, as well as my daily, I'm in a buy. So looking at my H4 structure, right? So I want you guys to understand, but I will definitely in future videos break this down in more detail. But there's always structure within structure in a way. So just keep that in mind. For instance, we have this bullish leg, this impulse correction continuation. However, within this particular leg, we also do have structure, market structure. Again, this is the impulse, there's a correction, there's a continuation, there's a correction, there's a continuation. So I just need you guys to keep that at the back of your heads. Now looking at this, we had printed out a low, a high, low, high, low, high. Market again. So this was the recent high low. Market broke that, creating a lower low and a lower high. So my overall anticipation that the market could potentially actually create a lower high and then push down to this negative 27. Now that could happen, but again you need to keep in mind that on the monthly, weekly, as well as the daily, I'm in an overall buy. Now looking at my H4 fib, so this is my H4 fib. We had this impulse correction, hit my 38.2% level on my fib, and then it continued. So it hit my next 61.8. From there I was anticipating for overall continuation, for actually a reversal, because next 61.8 is basically a level of reversal, and I'll show that and I'll break that down in more detail when I go to my H1 time frame. But again, we do know that on my H4 time frame we're actually in an overall sell. Now looking at the H1, so the previous H1 structure, market structure, we were in overall sell. We had this impulse right here, correction, continuation. So again, market hit my negative 61.8. It wasn't really on the exact level that once the market actually hit my negative 61.8 we're anticipating for a reversal. No, but it's sort of like roughly around that area. Not only that, we also had divergence at this particular area. So as you can see now, divergence basically a conference to actually use, and also it actually signifies a reversal. So divergence basically when the market is actually doing one thing and the RSI is doing the opposite thing relative to PA. So as you can see, the market is actually going down, however RSI is actually going up. So that's just another conference actually used to signify reversal. So negative 61.8 as well as reversal was actually one of the conferences that I had that the market could potentially push up. As you can see, I initially had this sort of like projection which did not really fill up because the market shot back down and then continue and then start reversing. Apart from that, we also had a break of market structure. As you can see on this time frame, we had this lower high, lower low, lower high, lower low, lower high, lower low. So we did break structure. In fact, this was the initial break, then created a high, 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 low, high, high. So once that happened, market then totally just shot up. Now looking at the current H1 structure, we're in overall buy. As you can see, the market is actually creating a high, 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 low, and then high, 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 low, high, 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 low, high, 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 low, high, high. So this is basically where I actually took this trade. So when the market actually came to this level, so there's something I want to actually show you guys, or at least bring to your guys' attention, is that one thing I realized about this pair, GBP CAD, I think this was not necessarily one of the times that I actually traded. This I think was I'm not really as familiar with trading GBP CAD, but I was just looking at it and it just so happened that the market was already at this particular broken level of resistance. Now it was testing a support. But one thing I realized about GBP CAD is that every single time price or PA, right, created a particular level of resistance, the market came back, retested it, and then pushed up. That's one thing I saw. I saw it again happen here. Market created a level of resistance, came back, and then retested and pushed up. So that's like something that gave me confluence that if the market were then to come to this level, right, after creating this level of resistance and it broke through this particular resistance, when it came here it had to push up. So that's what I saw. Then looking at the H1 as well, we also did have a bullish variation candlestick at this particular level of support. So we had a break of resistance. Now it says a support. We had bullish variation on the H1. On the 30 minutes we had divergence, as you can see. Even the 15 minutes we had divergence again. This basically signifies reversal, so two things doing the opposite. Now this is where most traders, I personally feel like, tend to miss out, or the most important thing that they tend to miss out. Now the most important thing in trading, guys, that I have to really emphasize is market structure. Without market structure, I feel like you'll lose trades unnecessarily, right? So as you can see that when the market, right, was at this particular level, I had to really look at structure. So I understood that we had this bigger structure right at this particular zone. However, within this particular leg, we also had this structure right here. And then within this particular leg, we also had the structure. So this was the lower high. This was the lower high that I was looking at, that caught my attention, guys. So when the market during London session, right? So when the market broke through this level on area, so it broke through this particular level of a lower high, creating a high low, and a high. So this is basically the leg extension, which is sort of like a confirmation after a market has actually broken a particular level of structure. For instance, we might have something like this, right? Market structure in the downtrend, we have this low, this is a high, low, then lower high, lower low, lower high, lower low, lower high, lower low. Market then breaks this particular lower high, which signifies a break of structure, creating a lower low. Now most people might enter here. Now what the market can do then is that the market can continue selling, because again because the market can do whatever it wants to do. Now once it can continue selling, because it's not really a strong confluence to have that once the market actually breaks a particular level of market structure, it will continue in that particular level or area. Now what you sometimes need is a three-leg extension to actually confirm that break of structure. So this is what happened here. We had this lower high, then created a high, a high low, a high. The market created a high low. So this was my confluence again, that once the market came to this level, I was now anticipating for buys at this particular area. I was anticipating for buys, which again it did play out. So when the market came to this level, we had this initial low, initial high, breaking above this level of resistance, creating high, low, high, low, and this was overall my projection. But the one thing that also gave me really confidence for this particular trade was this bullish variation. So we had this hammer candlestick at this particular zone, as well as this bullish engulfing candlestick, as you can see, and that's where I actually entered, and I just held it to the next level, which in my eyes was this monthly area. Now most people could have settled for a 1:4.5 risk reward ratio, or even 13 risk reward ratio, 14. But the thing is, I was really trying to maximize on this trade to capitalize on to capitalize as much as I possibly could on this particular trade, and which I did. And imagine, guys, risking 1% to potentially make nearly 19% on your trading account. I feel like that was just a good trade. Without further wasting your time, guys, we have reached the end of this video. do like and do subscribe, and see you in the next video.